Hello friends, a very important judgment from Kerala High Court in the case of Diya agencies. This case pertains to the input tax credit not appearing in GSTR-2A, whether credit is available. This particular case pertains to financial year 2017-18. This particular assessee or a taxpayer has taken the credit for the input tax credit which is actually not appearing in GSTR-2A, meaning thereby the supplier has not filed the GSTR-1 properly or not paid the taxes, and corresponding input tax credit is not appearing in the recipient's GSTR-2A. So Kerala High Court took up this case and analyzed whether the recipient can take the credit. First and foremost, the taxpayer has emphasized that he has met all the conditions to claim the input tax credit. Now, the conditions to claim the input tax credit is given in subsection 2 of section 16, where that period 17-18 there were 4 conditions basically. You should have a tax invoice or a debit note, you should have received the goods and services, supplier should have paid the taxes, or you should have paid the taxes to the supplier. Whether he has paid or not, it is not in the control of the recipient, and the fourth is recipient should have filed the returns. So these 4 conditions, as per the taxpayer, he has met all the conditions. So why he should be denied input tax credit just because a supplier has not filed his return properly or has not paid the taxes? A very important press release issued by Central Board of Indirect Taxes and Customs, CBIC, was issued on 14th of October 2018, 18th of October 2018, which is very important to note, where the board itself has clarified that GSTR-2A form is only a form for facilitation purpose, and your availment of input tax credit should not be dependent on the input tax credit appearing in GSTR-2A. Further, as per the Supreme Court judgment in the case of Bharti Airtel, Supreme Court also has told GSTR-2A is only a form for reference and facilitation purpose, and GST is a self-assessment tax, and all the input tax credit should be taken based on the self-assessment. Considering all this, the Kerala High Court has correctly held that GSTR-2A is only a form for reference and has sent the case back to the assessing officer to verify whether all other facts are correct, and only on the basis of the credit not appearing in GSTR-2A, it should not be denied. So this case is going to form a precedent. But one more thing which you have to keep in mind is these 4 conditions, what is there as per section 16.2, is there till 31st December 2021. From 1st January 2022, a new subsection, a new clause AA was inserted in subsection 16.2, which I think we have to keep in mind. And this stand of taking the credit even if not appearing in 2A can be taken only till 31st December 2021. From 1/1/2022, we have to ensure we are taking the credit only if it is appearing in GSTR 2B or 2A. So a good news for all the assessees taxpayers who have received the notice for taking the credit which is not appearing in 2A, where circular 183 also was issued, where you have to give a declaration from the supplier or a chartered accountant for the credits which are not appearing in 2A but you have taken it. So this is a way forward for at least for next 2-3 years till 31st December 2021, where you can take the stand and complete the assessment. Thank you.